Welcome to your daily stock market summary from MarketSnap. Markets took a breather today after an epic run, with tech stumbling as energy costs and yields climbed. We'll break down what matters for long-term investors while keeping an eye on the shorter-term swings that could shape your next moves. The major averages closed lower, with the Dow off about 1.2%, the Nasdaq slipping 0.9%, and the S&P 500 easing 0.7%. Rising oil prices and treasury yields weighed on sentiment as traders reassessed the odds of near-term rate cuts. Despite the pullback, the broader tape still reflects a market driven by powerful secular trends: AI infrastructure build-out, energy security, and shifting global trade patterns. For long-term holders, today's dip looks more like a pause than a reversal. The day's news flow centered on two big macro themes: persistent inflation pressures from energy and the Trump administration's fresh round of tariffs targeting 60 trading partners over forced labor concerns. Both stories carry implications that stretch well beyond the next few weeks. On the positive side, several large-cap names bucked the trend. Meta jumped more than 4% as investors cheered its expanding AI-driven ad tools. AMD and Intel each gained around 4% on renewed optimism around data center chips. On the flip side, Oracle, Palantir, and IBM all fell between 5 and 7% as profit-taking hit high-valuation software names. The moves underscore how quickly sentiment can shift when growth stocks get crowded. Volume leaders told a familiar story. Nvidia remained the most active name even as it gave back some ground, while Intel and Marvell drew heavy trading on AI-related headlines. Apple, Amazon, and Tesla also saw elevated turnover, reminding us that the Magnificent Seven still dominate both headlines and portfolio risk. Ray Dalio and DoubleLine's Robert Cohen both warned this week that AI-related debt could reach bubble territory, echoing concerns about stretched valuations. Yet the same voices noted that earnings growth, especially from the biggest tech players, continues to justify much of the premium for patient investors. Meanwhile, the Fed's latest Beige Book highlighted how energy-driven price pressures are rippling through the economy, prompting some businesses to pause hiring. That K-shaped reality, strong corporate balance sheets alongside squeezed consumers, remains a key variable for the second half of the year. Looking ahead, the earnings calendar stays busy. While many names report next week, investors will be watching how companies frame AI spending plans and margin trajectories amid higher input costs. You can find exclusive earnings transcript summaries on MarketSnap. Sector-wise, industrials and consumer cyclicals led the week, while healthcare lagged. The rotation hints that investors are still hunting for areas that can thrive even if rate cut hopes fade. For long-term portfolios, today's action reinforces a familiar playbook. Stay diversified across tech, energy, and healthcare. Keep an eye on valuation discipline, and use volatility as an opportunity to add to high-quality compounders rather than chase momentum. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Hit subscribe for daily updates and check out our latest SWOT analyses to stay ahead of the curve. See you tomorrow.